The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. It's my pleasure to be here Monday through Friday, 11 o'clock Eastern Time, 877-927-6648. It's the number to call. And I follow 2 great hours with Steve Rhodes. Really does a fabulous job of doing an analysis using his different techniques, as well as others that he's developed over the years, variations of others. Now, what's interesting is when I'm looking at the market, I'm saying to myself, wow, if we could just stop right now, close the day after everything that's happening, and close right at these prices, I will be one happy person. And there are a couple of reasons why. Let me go into them. I'll go into them carefully. But I think, first of all, let me just run the numbers. The Dow's down 30 at 50,498. I said just subscribers in my opening calls, my very intensive look at the markets every single day, starting at about, I don't even know, 6:15, 6:30 in the morning. Start sending out the charts. Always this chart right here with a very comprehensive look. This is this chart right here, a Dow daily with there's a paragraph here. Then there's another paragraph that follows it up underneath, and I go through all the different charts in that manner. So I said there's a good chance that today, early on, we'll see some weakness and then narrowing as we get into the 2 o'clock time period of the Fed, and then at 2:30, of course, Bernanke starts talking. Most importantly, it's what happens at 2:35-ish, 2:40. That's really where the basic trend, that's where you can get a better feel for the trend. Meantime, as far as I'm concerned, we are only in long positions. We are trying to get a particular short position off. I don't think we haven't got it yet. Hope we don't miss it. And at the same time, I will be looking at, coming up next week, I'm pretty sure I'm going to be looking at a lot more for the short side. Meantime, based on the Chapman Wave methodology, I'll do this as, we have no callers right now, so I'll just do this step by step. Here's the Dow chart. If there is no high above 15,555.07, then I should put it this way. If there is no high above 15,555.06, we've made peak B. If you hit that number exactly, it continues leg B. If you go even 1 penny above it, it means you can't get a peak B until tomorrow. Waving my hands here. I consider that this at 95% in the stochastic and the MACD very strong using my particular technical indicators, that this is a powerful move to the upside. A huge single leg, I can call it a single leg A, even though it's leg B, basically looks at it as every prerequisite of that single leg A up. If at any point the Dow closes underneath 15,300, let's make it a little safe. Let's call it 15,250. This entire thing could have aborted, and we could be seeing a pretty sharp pullback. That's a close. In the meantime, what I'm looking at, there's a real good chance, excuse me, that we will go towards the double top at 15,658. I should have put in the price time match. I've got that in my other chart here. I don't want to go to it right now. Just there's a price time match, which says that early next week we should be making a leg D to the upside. Frog in the old throat. The weekly chart is what's really going to be an absolute key pattern, trend, turn, extension, indicator, depending on certain price levels. A close above 15,542. So far the high is 15,555.07. And a close on the weekly, we don't know what the close is going to be. But if the close is above 15,542, that'll be one sign to say, hey, there is a chance that some of the indexes are going to recycle in the weeklies and only go to a leg B or C. And that says that there are further upside moves to come in the weekly charts. Fading from here is going to be very important. So let's go through the numbers. So the Dow has support on the near term at about 15,420 to 15,400. On the upside, a break above 15,590s would be a close above that would be really positive, especially if it's especially if it's leg B. But if it's leg C, that's fine. S&P, SPX.X. This is leg C. It's one peak ahead of the Dow, and there's a buy mode in place, and it says that the 1709.67 level is my upside target, and if it breaks above that, I don't think I can call this leg G in the weekly chart. I'm going to have to call it leg C. That's not to say that leg C can't have a pretty sharp pullback. That's the way it is right now. But it also says that there's a good chance that you will not take out the 1639 level very quickly on the S&P if it closes decisively above 1709. Let's call it 1712 area. That's a close. You've got gold, GCZ 13. Gold is on its way down. It's making that pattern that I call the A pattern, Eiffel Tower pattern. Let me just type that in right here so you know what I mean. I'll do it with the little quotation mark so that you can see it's only talking about a particular visual. And I'll make it a little faint because it doesn't have to stand out. You can see it pretty much as it is. There it is. That's the A pattern. And it says you've given almost a full pullback from the most recent, and let me just get there, from the recent start of a sharp move to the upside at 1271.80. This is the gold contract, December contract. And that there's a chance that you make a retracement that doesn't go to that low, and a lot depends on the close today. But if there's a close underneath 1288, then there's just a real good chance. You've got to expect that we're going to retest the low of 1271.80 that was made the week of the 9th of August. That's the way I'm looking at it at this particular point. Now, this is another factor that I'm looking at. If, in fact, there's a sudden reversal and the dollar, DXY, there's a dollar index, which is up just a little bit at 81.18. The actual contract's at 81.28, so the December contract. If you're looking at this, it's attempting. It's also made that A pattern. And the weekly chart says, wow, this is that rally that you had going up to the early September high of 82.67 should have continued. Pulling back like this says that 80.48 is probably the 200 period moving average. There are levels to watch it on the downside. 80.75, the low of the 23rd, the week of the 23rd of August, and the key is 80.50. Which coincides with 80.48, which is the 200 period exponential moving average. But I'm really not so interested in that. I'm looking at the monthly chart. And the monthly chart says if you start to close September, if it looks like it's closing under, I'd put it under 81, but I'd really make safe. To play safe, I'm going to say under 80. All of a sudden, what you're looking at is that up channel inside track that I use in the Chapman wave methodology has broken support. That should have been a buy area. And if you don't quickly, within the month of October, snap right back into the 81.70 to 82.30 area, preferably if this is going to be a positive, breaking of 82, I'd say into the 83s, you go into the 83s and suddenly I'm able to rename this and say that's peak A, peak B, peak C, and now I can expect D, and all of a sudden the 87s will become the target on the upside. That's how important this particular phase is for the dollar. Now, I want to talk about two things right now. One is that I still believe firmly that all the evidence I look at says that that like all the other, or not all, most of the administrations before, this administration is also pushing down to make sure that the dollar remains low, and that helps our trade balance, etc. So that's just the way I'm looking at it. It's not like the dollar isn't having some decent rallies. They're decent. but they're nothing like they should be without that downside pressure. And that applies to bonds. Why? Because if you look at bonds, just on the shorter term, I'm looking at the December contract, they've been in a trading range. I'd prefer right now, just for my own purpose, to go to bonds and look at, excuse me for all this coughing, I'm not sure why I've got this frog in the throat. But if you look at bonds, they too, like the dollar, isn't it fascinating that bonds and the dollar are holding up channel, very important up channel, up track, in this case, support levels? If bonds at any time in the month of September or October start to break into, they're at 129 and 25 seconds. If bonds pierce 127 and go to the 126s and close there in September or October, that's a very, very negative sign. They're right on the cusp of attempting some kind of a rally. We might see that today. We might see that bonds, in fact, all of us, hey, what if the Fed says those munis that have been sacrosanct for so long, what if he suddenly says, we are considering taxing them? These are tax-free bonds. I mean, come on. You start taxing those guys, and you've suddenly pushed money into the stock market big time. And you've just got people saying, I'm out, I'm done, I'm not into the bonds at all. This guy is pushing us into the stock market, and that's where we're going to go. That's kind of what might happen. So this is going to be very important. What do bonds do? Bonds spike and suddenly go above 131.5, close above 131.5. This is the continuous contract. Let me just talk apples to apples. 131, yep, same thing, 131.5 for the December contract. And all of a sudden, you've got something that's very important, because what you'd be looking at is the yields. You remember that peak D that I spoke about at 39.30? That's 3.93% back on the week of the 23rd of August. I said, normally you get a D, you can get an E. It's very often that you get Ds, but lately we'll be going to Ds and Es at peaks. Well, the 10-year note rate, this is the interest rate chart. The white one is the 30-year T-bond yield. This is the 10-year T-note yield at 29.84, peak E high, and you've got a peak C in the 5-year. And the 5-year is really the one that, look at the distance between these. This is also quite fascinating. This is one of the big distances that you've had between the 38.60 you've got on the 30-year, 28.83 on the 10-year, and 5-year is 16.5. What, 8-point increments? 6 and 8, 12 point. So that's very interesting. Anyway, I'm going to be watching those, and yeah, munis are only tax-free in the state that issues them. Yeah, but that's really important. Yeah, that's a good point. But in fact, it's something that I'm taking note of. Now, I had a couple of questions, and I'll answer them as soon as we get back. One was crude oil. We'll look at crude oil, and we'll look at the VIX and some other things, and I'll talk about the afternoons.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Basil Chapman. This is Tiger Technicians. I had a real interesting thing. I was just sent, and I am in the den, and it's about Beethoven's metronome markings. Well, this goes back decades, and in fact, I had played in an orchestra at the very beginning when it started up, the Boston Philharmonic Orchestra with Ben Zander, and he has spent years performing the pieces at the tempos that Beethoven wrote, and many people think that there was something wrong with the metronome. But when you perform some of the pieces, get away from the ritual of what's been done over the years and play them at the tempo markings, they become very different. And I suspect that in a way Beethoven, in his own genius, had a set tempo in mind, and that the tempo marking was very close to what he wanted, because he would have known that if it was that speed, that's the speed that he wanted it at. But it'll go on forever. We will never really know. So great question. When some of the pieces are played at the tempo that Beethoven marked, they are very different. And usually it's because they're much faster rather than slower. Let's go to the first question was on crude oil. And I'm going to answer that by saying the crude oil itself has formed a rectangle formation, made a peak F top in the Chapman wave at 109.70 on the 28th of August. It had a spike down, that's a big move, down to 102.22. Then it popped back up, and now it's just filling that. Now, it does look like the H pattern, and this is kind of like a Roman candle, Chapman wave Roman candle. But we've gotten into halfway of the wick, and the price is at a very good inside day today. I suspect that if there is a pullback, it takes you to 102.22 test. Could even go a tad lower to 101.90s. But I don't see at this particular point a smash to the downside, not yet. I think that there could be one coming, and all I would say is if crude oil closes under 101 to 100, that support, this is the December crude oil. Now, I'm not looking at all the different contracts. I'm looking at that particular one. Then I think crude oil has the possibility to drop even further. And then, of course, you've got to be looking at the XAL, which is the airline index, the ARCA airline index, which is fabulous. It's been testing the 200-period exponential moving average, gone from 12.62. Hey, listen, this is one that was up at, if I can just do this quickly, up at 200 once upon a time. 210.64 July of 1998. Oh, it's had a bit of a pullback, went to 12, and now it's trading at 60. It's had a real nice comeback. This is a very interesting pattern. I was looking at it the other day. This is like an expanding triangle. And these expanding triangles have a way of doing something that often evolves and becomes the pattern that I call the Chapman wave stalk leg formation. So that's what I'm going to be watching here. There's the long leg. It's a single leg, even though it's gone to an F. Then it pulls back. It doesn't break the low. In this case, it mustn't break 52.57. It has suddenly one big spike to the upside, and then it plummets back down and goes into the body. If it closes under the body, it means one thing. It's like the H pattern. If it closes above the body, it means something else. But very often, what that does is it pulls back, and you think it's all over. But no, the pattern continues. That's the beak. It goes leg, body, neck, neck, beak. If it goes down, no matter where it goes to, it has a very strong bounce back up, and then you have to use other techniques. So I'm watching the airline index really closely. Now, put together with the airline index, if you look at the IYT, helped today by Federal Express, I bet. Whoops. This is peak B, with a stochastic at 86% and the MACD still good. Now you've got this pattern in the weekly chart, like the W's that we've been looking at, a rising W formation that says if you continue and break above 119.45, then you can consider that there's another pattern that's evolving, and that's a kind of a wedge pattern. That says the next area of resistance, depends which week you're talking about, will be in the 121 to the 121 to 122.5 area. So I'm watching this one real closely, and the support level, it's got tremendous support. That support completely breaks if you close under 110. It's at 118.51 right now. The IYT, this is the iShares, Dow Jones Transportation Average. I think I'll talk about it every single day. The QQQ Power Shares ad. It's going on right now. Let me just hear it. Listen to that music. It is just horrible. It's not music. Power Shares QQQ, change the ad. I'll be back straight after this. Oh, I've got that out the way.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi folks, Basil Chapman, Tiger Technicians Hour, and the Dow is down 39, S&P is down minus 239. You know, I like to talk time frames, and in talking time frames, it's really important. Let's just go to the Dow for one moment here. In talking time frames, it's important to be able to go from the daily, and my daily says at this particular point, I have absolutely no reason not to think at 94% in the stochastic that the Dow will go and higher. I'm not saying how high, I'm saying higher. That's number one. Number two, I've had a couple of people asked me, what happened with the makeup when we changed, when you take out your package, you put in Goldman Sachs, etc., in the Dow? You know, there obviously are certain requisites that have an affect and an effect. But if you actually look at the charts, all I can say is if you look at the charts, let me see if I can find one here. Dow weekly, let me see. Yeah, let's just go to this one here. I'll pull this across. You tell me, can you see anything about any stock, any difference? All I can say is absolutely the Apple weighting in the Qs made the difference, I believe, made the difference to have the Qs somewhat stronger than the others. But if you're generally looking at the trends will remain the same. Why? Because in sharp down moves, even the best stocks pull back, and in sharp up moves, even the weaker stocks get dragged up. And that's really my thinking there. So, yeah, there's something happens, but to tell you the truth, I would defy anyone to look at a chart and say, right there, you had change in the composite, in the mix. I think that's very hard to say. So all I can say is that the trend, if you look at enough charts, you'll be able to say, hey, maybe it makes a difference, but it's not a difference that is really visually applicable. So now let me go to the next thing. I'm talking time frames. You see, this is the 120-minute chart. It demonstrated a sense that you could start to stall. This is the 120-minute chart of the Dow. This is the VIX 120-minute chart. It made an arch, a higher arch. It's making higher highs, higher lows. If the volatility suddenly spikes and takes out that gap high of 1509, it's at 14.39. If it even gets to 14.80s today because the market is starting to tank and holds, then we will have a good couple of days of pullback. Welcome sign. And that's that whole thing that I spoke about. The stochastic takes you to a powerful leg B or even a C if you get the stochastic MACD Chapman wave squash between the two of them. And then you wait a little while and then you get your D. So that's the way I'm looking at it right now. Not only that, when you stall just before the previous high in this cup pattern, sometimes you have to wait a little bit because there's a powerful move. That powerful move just slices right through. In this case, slices right through 15,658. That's a Chapman wave cup and ladle pattern. That's very positive. And that should say, let me just move this because that's not the right time frame. That's the time frame right there. So that extends to about the 23rd-ish or so. And so this is what we're looking at. Not only have we got options expiration this Friday, they can have a lot of games between this afternoon and Thursday and Friday's close. So now let's go to, so time frames are really important. Here's the other aspect. In the weekly chart, I'm not going to be able to do anything until I see how this dashed line up channel works, because that has a very strong resistance at about 15,800. Okay. It has tremendous support at 15,229 on the weekly chart. The monthly chart is very important. Look, we are bumping up against this very long-term inside track resistance. Now, that reminds me, I wanted to show something yesterday. I'll show it today. I didn't have time. So now I have time. I'll make time. Time frames. This is in my CD introducing the Chapman wave methodology. This is slide 275 out of 476 slides. A time frame gives the setting of the bar's duration that you are looking at. Example, a 10-minute chart means that every bar has a lifespan of 10 minutes, regardless of how far back you go. In other words, a 10-minute chart you can say for three bars. So that's 30 minutes. Or you can say for 30 years. It doesn't matter. The bar is the bar. A daily chart gives 1 day's worth, just 1 day's worth of detail. In our case, my case, I only look at the open from 9:30 to the close at 4 o'clock. In the futures, I use it 24 hours a day. But in the prices that I look at in stocks and the indexes, the cash indexes, it's only the opening and closing price. So it doesn't matter about the high, the low, the open, the close, or the volume. It got nothing to do with me. I only look at the high and the low of the bar. So that means I could look at candlesticks. I could look at anything. Here's what I like to think about in terms of time frames. This is on slide 276. The Chapman wave concept of time frames. The concept of time frames is really one of perspective. The further away one looks, the longer the time frame required. The closer one looks, the shorter the time frame needed. Here's an example. After your annual doctor's appointment, you select a date for next year's checkup. You're just done, and there you go, and you're signing up for the next, and you pick the month, say July. Then the week, say the second week. Then the day, let's see, okay, Tuesdays are good. Tuesday the 12th. Then the time, 2 p.m. Now it's out of your thoughts, done with. Suddenly it's January. So now you've got nothing to do with the year anymore. The year's gone. The date of the year, that's fine because that's next year. But the year itself, as a time span, gone. The year is not an issue anymore. Rather, you focus on months. You're thinking, okay, in 6 months I've got a doctor's appointment. Comes June, you're thinking, uh-oh, doctor's appointment next month. Now the months have been torn off the calendar and it is July, and you think next week. Time-wise, the weeks are finishing. So you're done with the year, you're done with the months, now you're talking weeks. All of a sudden, the weekend, before your appointment, you're thinking, oh my goodness, in 3 days I'm going to get a colonoscopy. It's days. And on Monday, you're thinking 24 hours from now, I'll be touching my toes, only hours away. Then while pulling into the parking lot, you're thinking, just minutes to go. The procedure is done. You go back to the desk and you sign up. You're done with the minutes. You're done with the seconds. You're now looking at 1 year. That's how I like to look at time frames. And I thought of that the other day because I was sent by one of my subscribers a really fabulous thing on confidence, basically. And it put into perspective how you can put time together with attitude and focus. Steve Rhodes does that real nicely. So in this particular instance, I'm looking at the monthly, and the monthly says, look, I'm holding the 9-period moving average. What are you worrying about? That's down at 14,075. I'm trying to test the resistance. I've had 4 opportunities in the last 5 months, and I haven't broken that trend line. What is the trend line? The trend line is now at about 15,760. This is the monthly chart. And we have to think monthly chart now. Why? Because in the Chapman wave, a peak D is where you start to get a little bit cautious. You don't have to pull back sharply, but look at that peak D right there back in 2011. May of 2011, 12,876. We dropped really sharply down to 10,404. So that's why I like to look at time frames. So let's go back to our story, not the story of the colonoscopy, but the story of looking at the different sectors. So the crude oil, if I look at the USO, the USO has a pattern that says, I have broken what was a trend line support. But that support, if I look at it closely enough, is right there because I want to be parallel with the most important trend line that there is, and that's that long-term trend line in the daily chart. This is the U.S. oil fund, and this is going to be key. So if the USO, it's almost the same thing. Whoops. The USO takes out and closes, it's trading at 38.14 up 40 cents. If it closes under 37.40, all of a sudden, you're looking at the left side low of 36.99. I looked at the SCO the other day. I thought, good time to get into that position. You know what? I'm not seeing anything. The MACD's had a fabulous move. Stochastics had a fabulous move. And this thing is down. The SCO, which is 200%, Pro Shares, Ultra Short, Dow Jones, AIG, crude, hasn't gone anywhere. Today at 3 o'clock, I think we might be seeing either an inflection point where the market says, whew, thank goodness, now we can go on our merry way up, or it says, wait a minute, let's just digest this, and we have a digestive phase. The digestive phase should say, bonds could suddenly spike to the upside, TLT's at 103.37, maybe it goes to 105.50 in the next couple of days, breaks above into the 106s, that'll say, hey, you got to be careful here. Volatility index on the downside, we don't have to worry about the downside. We know that you can go all the way down to the 11.83 previous low. That's not an issue. The issue is what happens if the volatility index suddenly spikes and it starts to trade in the 15s over the next 2 days. Trades in the 15s, then there might not just be a 1 to 2 day pullback. It could be deeper than that. So now let me run quickly through a whole bunch of things that I want to do talk about today. The first thing is, I cannot believe that I always think about it. First of all, I always struggle to remember what the name of the symbol is, what the name of the company is, and the symbol. In my mind, I've got it absolutely clear. It's uniforms, rental uniforms, and I've thought of it for years. I'd spoken about it back in 2009, 2010 as my watch indicator to see when the economy is starting to come back. Cintas, C-T-A-S, C-T-A-S? Yeah, I got it. Good. Leg F in the weekly, unless it's recycled, and it's brand new leg B. Leg F in the monthly, nothing technically wrong, but so far I have no choice but to call it an F. It could be 2 parallel highs, 2 parallel highs. Wow, what happened there? Yeah, 2 parallel highs. So it could be recycling here as well. Look at this. I've got a peak E in the daily. The daily looks a little extended. It could be the right right arm extension if the stochastic starts to fail, but it's at 85% and the MACD is acting very well. If Cintas starts to break down over the next 3 weeks and takes out 47, it's at 50.26 right now, 4 points, it shouldn't be a big deal, 4 points on the downside after such a fabulous move to the upside. That would tell me it's broken under 48.70, which is the 9-period moving average support in the weekly chart. Something's going on. But at this particular point, it looks pretty darn good. I don't see anything here other than the unbalanced volume making lower highs. It's tip-off, but it's not the end of the world because the fast-moving average of the MACD is still good. So Cintas Core, uniforms, etc., rentals, and it's really a very nice bellwether, I found. This is telling me more about the economy than any of the economists and saying things are improving slowly. Look how steady it is. Now, here's the other thing. If this is, in fact, a G right there, and we've started a brand new buy mode, and this is really B, and I won't know for sure. This looks like it could be. That's going to say that Cintas has a chance to go to the 51, it's a 50.25, 51 to maybe 52.30-ish area. Then we're going to have to check everything. So I'm looking at a bunch of things. Look at this. This is the EUR. This is the euro-dollar currency pair. Peak C, it should make a D above 1.33848. That's the high of the 16th. But it's made a very quick A to B to C in even a quicker time frame than it came down. So it might take its time to move a little higher and retest the previous high of 1.34511. All I can say is that if it pushes above 1.34, then there's a really good chance it's going to test the 1.345 area. Now, on the downside, it could fail because the weekly chart is, the stochastic's only at 71%. The MACD is good, but really not great. And the monthly chart is holding, but it's just trading within an inside band. So a break below 1.33, certainly a break below 1.32 that holds, says, hey, be careful. That euro is pulling back, and that will give the dollar an opportunity to try to test the 81.47 or higher level. So those are the parameters I'm looking at. But let's do something else. Let's look at my Dow Quartet. GE. GE is trading at 24.50. I must say that we are long in my opening call. We're long. It's doing very nicely, and it probably has recycled the weekly chart from an arch formation into a rising, higher highs, higher lows. And if GE had to break down, it needs to close under 23.80. It's at 24.50, and it should do that in the next 2 days. Otherwise, from the look of this particular pattern with the left side, right side price time match, it should test this candle, this bar of the 1st of August between 24.52, it's right there now, and 24.87. That would be the anticipation, and it's got in my left side, right side price time match until the 24th to do that. Now let's look at the next one, IBM, which was acting very poorly, and then suddenly had a very quick peak, A, B, C, and a D, and it's trying to get to the 196 200 period exponential moving average. Stochastics at 87, that's good. MACD is good. This is good action, not great, but good action. So, and the weekly chart is bouncing. The monthly chart still says, hey, it looks like it's going to go to the 176s area at some point. Now you've got that. What about Triple M? Triple M has been just a stupendous stock. It's now at 120.06, up 13 cents. Made a new all-time high today in leg D in the daily, but a breakout with a stochastic at 93% with a squash. And you've got leg D in the weekly chart and leg E in the monthly, trying to up in the channel. And then we'll look at UTX and we'll talk about these.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Questions are the answer. You want a better life? Ask a better question. My driving force in life is, how can I become the intelligence behind financial freedom? It's why I take massive action. It's why I've invested over 10,000 hours and thousands of dollars to create the answer, the ultimate money machine. Hi, I'm Steve Rhodes, and on Friday, September 27th, I'll be hosting a one-day online master trader course, The Ultimate Money Machine, where I'll teach you the exact same trading strategies that I use every day when trading the markets and advising my newsletter subscribers. Learn how to precisely identify the market's next move, when to pull the trigger by letting the market commit to you before you commit to it, and how to manage your trade to maximize your results, just as we did in the month of August, when I advised my newsletter subscribers of 11 new trades resulting in 1 loss and a combined profit of 129%. Our next move? It's days away. The cost of this course, $595, less than $2.50 per trading session over the next year. If you're looking for the answer, it's the Ultimate Money Machine. All the details on the front page of TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. I have a chart right now. Boston downtown rejuvenated. It's the old Filene's area. I think it's the old Filene's area and other older venues. Now they include shopping centers, offices, restaurants, sports complexes, all sorts of things. So this is the refurbishing of the old building. I love that. And there behind it is a new building that's going up, Shoppers Park. So what we're looking at is that Boston is once again participating fully in the expansion of, and I think for the longer term, I always think this is for the next generation. I'm not sure it's for our generation, because you have to rejuvenate cities and buildings, otherwise you just land up with slums. That's the one thing. And the other thing is, a week from tonight, September the 25th at 7 o'clock, I'll be talking at the Boston Investors Group 10th Anniversary Meetup. I'll be the guest speaker. I have the privilege of being chosen as the guest speaker. So it's at 70 Memorial Drive, Cambridge, Mass., MIT Sloan Building, room E51-325. It's the 3rd floor, corner Wadsworth and Amherst Street off Memorial Drive. 7 to 8 will be the celebration with the Boston Investors Group and the IBD, Investors Business Daily group meeting together, and guests. Please, if you want, bring some sandwiches, main dishes, veggies. There's always fabulous food. Everybody brings their specialty, so that's terrific. And I'll be on at 8 p.m. So 7-8 is the party, and 8 p.m., about 8 o'clock, I'll give the presentation. And there was fabulous questions, and really, I must say, questions that come up that are different to the ones I normally get. I love that. So that's very exciting. So I just wanted to do that. Now, let's go back to our story. So now look at UTX, made that cup formation. It's broken above it. It's in peak C. I'll call it an alternate count. Right now, there's no need to. I think it's going to go to a leg D, even if there's a bit of a pullback. That's not the issue. It's the weekly chart that seems to me, I don't have any other way of counting it right now. I've tried. I've gone through everything to see if I've made a mistake. I'm going to go through it again to see if I've labeled it correctly. So far, everything looks like it should be there. This could be leg B in the weekly chart. That's really positive. And look, UTX also going for that inside track resistance area, and that says at about 115.02. It's at 109.32. That would be the longer term perspective for United Technologies, and tremendous support at this particular point at 107.72. But wait a minute, let me just do one thing out of request. USD JPY, I'll do that. That made a peak F top in the daily. It failed. You see, you can fail, but normally you go to the D, E, or F underneath the previous high of the 8th of July. Now look what's happening. It's pulling back, and it better do this. Otherwise, it's going to pull back much deeper. It better make it cup formation. Another one, start heading higher. If it breaks under 90, if it breaks under 98, it'll be going down further. And if it pops up, it's got to take out 99. It's got to take out 100 to be able to really start retesting that 100.60 area. So here we are. Let's look at Google. Google I think it's made its high for now. And these stocks, these major stocks, are just resting. So Google's resting. Amazon is resting. No, Amazon was resting. Now it's in leg C up. Amazon's acting very well. And if Amazon takes a 309.39, I have to consider it's recycled to leg C up in the monthly chart. That'll be very positive. So I had a couple of questions about that. I'm sure I'm missing something. Let me take a chance to look down. Oh, so CTAS, that was CTAS, this was Syntas that I was looking at. So far, that's telling me that things are really improving underneath what all the economists are looking at, and that to me is a very good sign. That's uniforms that are rental. I mean, it would not be going up like this if they weren't being rented. And FMC, no, CPLA, so no. Well, I think I actually got all those things that I wanted to talk about done. Hey, perfect time. Stay tuned for Larry Pesavento. Larry will be coming up next. I will be updating for my subscribers, although I'm sure we're not going to take any action other than what I've written on my Traders Corner. But at about 2:30ish, I'll be back. Stay tuned for Larry. Should be a wonderful show as always, and great shows coming up. And thanks for being here. I'll be back tomorrow morning.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.